Let's get talking about the real estate space. Mahindra Lifespaces is the stock on our radar after its latest housing project. Happinest Tathawade has received over 400 applications. Additionally, last week also the company inaugurated an industrial park in Chennai. So to discuss all of this and about the company's prospects going forward, we have the MD CEO Arvind Subramanian joining us now. Thanks a lot, Mr. Subramanian, for joining in. First up, just on this Happinest Tathawade project, have you completely sold out? You've received a strong response. What kind of realization per square feet have you made here?
So it's been, as you said, a wonderful response. We launched this project just 2 weeks back. So within 2 weeks to receive more than 600 applications, that's the latest count as of last evening, is extremely heartening. And to me, it speaks to several indicators of the consumer demand. Firstly, the fact that consumer demand for housing is still strong. And there was a fear at the start of the year that because of the pandemic, people may withdraw from the category, but we are actually seeing more people committing to the category rather than withdrawing. And those who are committing are voting with their feet and choosing credible players and are being very discerning about their product. So I think these three factors have played very strongly to the success of this launch.
All right, Arvind, but you didn't answer our question. 600 applications is what you've received. Is this project totally sold out? And also you're saying that, in fact, momentum is rather strong, but you have that leeway that you've got on stamp duty. It's been brought down, but that could last only till March 31st. Post that, do you see things slowing down?
No, so that is certainly a factor that has catalyzed a quick closure of sales. So many of the customers are wanting to register before 31st March to take advantage of the stamp duty cut. We do anticipate that if the stamp duty does go back to historical levels, there will be a temporary pause in the market in the first couple of weeks of April, by when it will recover. And to answer the question you first posed to me, yes, in fact, the first phase of this project is now fully subscribed. So we had launched 600 apartments and we've received 600 applications.
All right. And the realization per square feet, you said was what?
No, so it's our realization varies is on an average about 8,000 rupees on carpet area.
All right. And, another thing that I wanted to know, all right, hang in there. We'll come back to you. We have the SEBI chairman speaking on what took place yesterday on the National Stock Exchange.
Overall share of mutual funds as a percentage of total average daily turnover in NSE cash segment reduced from around 7.5% to 5% in this financial year compared to the previous financial year. Similarly, in the NSE equity derivative segment, the percentage fell from around 4.3%, 3% in the same period. If we now consider the trends in the debt and income-oriented schemes, initially we saw massive redemptions in the month of March 2020, resulting in total net outflows of around rupees 1.95 lakh crore. Since then, however, we have witnessed a total net inflow of around 2.46 lakh crore in such schemes during this financial year till January. As is typical for debt or income-oriented schemes, the month-on-month net inflows in such schemes do not show a clear trend of outflow-inflow like equity schemes, since fund flows in the largest category of liquid or overnight and other short duration schemes typically follow yield movements and quarter-end obligations. The credit risk schemes, however, saw a clear trend. The initial aversion following the pandemic and the closure of certain schemes led to a significant net outflow of more than rupees 19,000 crore in credit risk schemes in the month of April 2020, with the AUM of such schemes falling around 35% compared to the previous month. Since then, the credit risk schemes continued witnessing outflows every month till December, though the outflow amount has been reducing over time. The month of January 2021, however, saw a reversal with a net inflow of more than 350 crore rupees into such schemes. Despite the outflows in equity schemes during the current financial year, there is an overall increase in AUM of mutual fund industry crossing rupees 31 lakh crore in December 2020 on account of mark-to-market gains in equity market and net inflows in debt schemes. This reflects continued importance of mutual funds as a significant institutional player in equity and debt markets in India. Now coming to FPIs, if there is one institutional investor whose behavior towards Indian securities market changed drastically post onset of the pandemic, it is the FPIs. This financial year has been unprecedented in respect of FPI inflows into India's equity markets. FPIs have already made a net investment of more than $35 billion in this financial year in the Indian equities markets, which is the highest in any financial year till date. If we see the data on a month-on-month basis, initially in the months of March and April, and later in month of September 2020, we saw FPI outflows from the Indian equity markets. Apart from these months, however, every month in this financial year has seen a net FPI inflow. The months of November and December saw substantial inflows of more than $8 billion each, with December accounting for the highest ever net FPI inflow in equity markets in a month, amounting to $8.5 billion. India is the highest recipient of FPI inflows in equity market during this financial year compared to other major emerging markets, several of whom have seen outflows during the period. This signals the confidence of the global investors in the Indian economy and the market as a whole. Now, coming to the corporate behavior, while investors play an important role on the demand side, on the markets, the supply side is equally important. Therefore, it is relevant to analyze as to how the behavior of corporate changed during the pandemic. Overall, the pandemic induced major unprecedented changes in corporate behavior. I will place certain points on this.
That was the SEBI chairman speaking. We will cut across back when he's speaking about something that took place yesterday, because the street wants to hear him on that as well. Currently speaking at the National Institute of Securities Markets webinar, talking about the kind of FPI flows that India saw. But let's get back to our conversation with the management of Mahindra Lifespaces. Arvind Subramanian joins in. Apologies for that detour, sir. You were talking about good response that you saw to one of your recent launches. At the same time, some bit of trepidation as the deadline for that cutoff on stamp duty comes by in March. But I was reading a brokerage report which said that you have ramped up the aggression in your business. The last 4 or 5 years, your pre-sales have been between 500, 650, at best 1,000 odd crores. The brokerage talks about 2,500 crore worth pre-sales sort of bookings. By when do you think that will happen?
So we're setting ourselves up to do that kind of business over the next 3 years or so, 3 to 4 years. And that's the foundation we're building in the company.
And what kind of investment have you earmarked for the same?
So we anticipate that every year here onwards, we would like to acquire new land parcels, which will give us a sales potential of about 2,000 crores. So that would mean about 3 to 4 new land parcels acquired each year, potentially an outlay of about 500 crores towards land acquisition year on year for the next few years to get to that level.
All right. So importantly, how's your balance sheet looking then, if you're going to be looking at acquiring land parcels? And also I understand that your cost of borrowing is pretty low in comparison to peers. So if you could quantify that as well.
So in fact, our balance sheet is one of the strongest in the sector. And we have a net debt to equity close to zero on our balance sheet. Our cost of borrowing has dropped by over 100 basis points over the last 9 months. One of the advantages of the softening interest rates. So I would reckon today our cost of borrowing is comparable to the best among the peers in the industry because of the strength of our balance sheet and the fact that we've managed the business reasonably prudently.
You're talking about acquiring a fair amount of land to get to that 2,000, 2,500 crore sort of run rate. But what about the land that you already have? You have close to 60 acres in Gorbandar, almost 400 acres near Pune, 1,000 acres around Murud. And at the same time, there is some land owned by the parent in Kandivali as well, close to around 40 acres. What about the development potential of these? Any movement on these?
Yeah, so all the land that is owned by MLDL, the ones you mentioned, are already in the works, either at planning stage or at various stages of approval. These are large land parcels, so it will take potentially anywhere from 12 to 24 months, in some cases even 2.5 years for them to come to market. But work is already underway on all of these. We believe many of these will be gold mines when we bring them to market because they're sitting on our books at a very low book value, and the market potential has grown tremendously.
Okay, all right. Thanks so much for stopping by and giving us, your comments in terms of the industry, as you seem to be doing pretty well in terms of the recent launches, and balance sheet as well, as you mentioned, is in pretty good shape. Well, on that note, though, we'll slip into a short break. When you come back, we'll talk more about the markets as well as on stock-specific action. Stay with us.